Hey guys, how's it going, and thanks for coming. I'm Nick and this is Real Life Money, where we talk about real life and money because you know schools aren't. Don't forget to subscribe. So let's get started. So in this video guys, we're going over what stocks are going up while the market is crashing. Now obviously this year has been a roller coaster. Stocks have been up, stocks have been down, mostly down, especially right now. A lot of people are scared of what's going to happen with increasing interest rates, with Fed talking, with Trump opening his mouth, China going on. So a lot of stocks are down. So if we look into the S&P 500, we can see in the past 3 months, it is down over 4%. And the last month it's down almost kissing 2%. Now, even worse, the tech industry, we could look at the NASDAQ. 3 months they're down over 8%, and 1 month they're down around 4%. So I know a lot of, especially beginners, are heavily invested in tech stocks. The Apples, Amazons, Netflix, Facebook, Alibaba, all those guys, you know, they're good companies, don't get me wrong. But they're down horribly right now. Like, these companies are in correction territory, close or beyond 10% down. So that's why it's really important to understand diversification, because while tech is down, there are other industries that are actually in the green, and that's exactly what we're going into now. I thought it would be a very interesting perspective, because if and when, because it's eventually going to happen, when we go into a bear market, I mean, basically everything's going to go down at that point. But if we look at these other companies, they're going to be more favorable than the tech stocks in a bear market, because it's just a little bit safer. These, we could see now with the little bit of panic, these are stocks that people like. So I think it's really important to understand that now, before a full-out bear market happens. Alright, so how I'm going to have this set up, and I'll have it timestamped. So we're going to be looking at different industries within the market. And within the different industries, I'll be going over some of the popular stocks out there, kind of averaging some returns. So I'll leave timestamps so you could jump around. And I'm leaving a very interesting one for the last industry. I talked about it a couple times on this channel, but I don't think a lot of people are even aware of it. So again, it is up when the overall stock market is down, so it's good to know. Alright, so let's get right into it. We're not talking about tech stocks today because we have other winners. Alright, so this is a website called FinViz. I'll leave a link in the description if you want to check it out. It gives you basically all the companies in the S&P 500. And obviously you could see the big guys. You could see Google, Facebook, Amazon, Apple are all red, but you can see there are still green guys in there, and those are the ones that we're going to be focusing on. Alright, so the first industry that we're going to be focusing on is healthcare. Going back to this chart, you can see healthcare toward the right with that giant J, and J, that stands for Johnson & Johnson. Alright, so we could see the top guys, like we just said, Johnson & Johnson has been up. That's around 8.8%. Some other ones, Merck, doing very well, 7.6. Pfizer, we have AbbVie, which is, they've been down recently, and that's, I believe, is kind of value play. I picked up a few shares of them like a week or two ago, so I think they can turn around. United Healthcare, UNH, and CVS. They've been actually crushing numbers. So the healthcare industry has obviously been outperforming the overall market. From the ones that we just looked at, their average 3-month return is around 8.7%. And actually I didn't factor in AbbVie because I just think they're undervalued right now, so they have been rebounding. I bought in a little bit, around $80, now they're kissing 90. But anyway, they're definitely maybe 7-8% in the past 3 months. Past 1 month is around 4.8%. Now, if we think a little bit about the healthcare industry, if you think of like a bear market and things collapsing and crumbling and, you know, all this stuff happening, people need their drugs. No matter what happens, if the economy is good, if the economy is bad, people need their medication to continue their lives, to help them get better, or to simply survive. So no matter what happens, they need those medications, those healthcare, especially health insurance, United Healthcare. I'm definitely looking into them. UNH. I want to start loading up on them. But I think it's not completely recession proof, because basically everything kind of does go down in a bear market. But I think healthcare is definitely something to look into. They also usually have high dividends. Alright, so moving on to the next industry, which is utilities. And excuse me guys, because I'll be honest, I don't know too much about utilities. I know like all the big guys, I know some other industries as well. I just never really focused on utilities, unfortunately. I should have, because it's actually up now. So I definitely think we should look into these. But these are some of the top utility ones that have been doing very well. So we could see DUK, that is Duke Energy Corp. SO, the Southern Company. We have AEP, that is American Electric Company, American Power Company. NEE is Next Extra Energy, and D is Dominion Energy. Like I said, I don't know too much about these companies. However, utilities as a whole has been doing very well, and people focus, well, you know, people pay utilities no matter what happens, basically, whether it's energy or any other type of stuff like that. So the average return for the past 3 months for the ones that I mentioned is around 4.2%, and the past month is 6.2%. And real quick, why I'm kind of focusing on 3 month versus 1 month is because that's when the market has had the most volatility. You know, recently, like October and even a couple months before that, has been sharp declines downward. And I think this kind of could correlate somewhat to a start of a bear market, like I kind of said before. So these are industries that we could look into. The next industry that has been doing very well has been discount stores. So discount is kind of toward the top next to Amazon. To the right, we could see giant WMT, that is Walmart. We could also look at DG, which is Dollar General, a couple other ones, Costco and Target. The other one that they don't show on the overall chart but is DLTR, that's Dollar Tree. So their average return of around 3 months, is around 5.7%, with 1 month of 8.5%. Again, thinking of discount stores, no matter what happens in if the economy goes south, people want to save money, so they go to these stores, whether it's Walmart, the dollar stores, discount stores, like Costco or Target. So in recessions, not to say it's recession proof, but people still go there. So they're good investments. They also usually carry dividends. Some other stores or restaurants that I kind of grouped together, but some of the main ones that definitely stood out to me, kind of right below the discount stores that we saw before, but with restaurants, McDonald's, we see a little bit down further from that is Starbucks, and also TJX. They own a bunch of different discount department stores, such as Marshall's, Home Goods, TJ Maxx. So that's definitely a company I'm looking into recently. But their 3 month return is averaged around 17%, and 1 month is around 9.5%. Again, kind of similar to the discount stores that we said before. People are still going there. We're talking about like TJ Maxx. I know one just opened up by me. A lot of people go there. McDonald's, Starbucks, people still need food and their coffee. So it's safer than these tech giants. The next industry is airlines. And I think they kind of flew under the radar. See what I did? Sorry. So they kind of flew under the radar recently because they actually done very well. So let's go back to this chart a little bit further down from what we were just looking at, like restaurants. But it's under major. But there is DAL, which is Delta Airlines. There's UAL, which is United Continental Holdings. And AAL, American Airlines Group. So past 3 months, they returned to 5.6%. with the last 1 month returned around a 14%, which is very interesting. Also, Warren Buffett has been investing heavily in airlines, and he's been doing very well, especially recently. I personally also earn Berkshire Hathaway. He has a bunch of everything. He has diversification of kind of the entire economy. It doesn't pay dividends, unfortunately. Don't hold your breath until they do, because they probably won't anytime soon. But Berkshire Hathaway is definitely good holdings for the long term, and I definitely have a few shares of them. Another industry that no one usually looks at because it's so boring, but they destroyed the past few months, so let's look at them, with consumer goods. A little bit further, you could see PG next to giant Apple there to the right. PG is Procter & Gamble, and EL with Estee Lauder. So the past 3 months, Procter & Gamble and Estee Lauder returned over 10%, and the past month around 15%. Now Procter & Gamble, I mean, there's also Clorox in there. They were kind of down, but I just want to focus on these guys. They have their dividends. Procter & Gamble has like so many different products. Again, kind of recession-proof, because people will always buy their products. And recently, came into my knowledge, Estee Lauder, shout out to my girlfriend, hey sweetie, that's involving makeup. And just because I never thought of it, because I don't use it, I know it's surprising because I look so glowy, but obviously people are going to continue to buy makeup. No matter what's happening in the economy, they're going to buy it, they're going to refill it, and use it. So again, it's kind of recession proof. I'm going to question my girlfriend because she's into that stuff, so I want to do more research into it. Real quick side note, staying on the topic of makeup, because this industry just, I don't know, I'm learning a little bit more about it. But aside from Estee Lauder, I still don't know if I'm pronouncing that right. But anyway, aside from that, because it's a brand, there's also a makeup store, Ulta, which is also very interesting. And they've been taken off, so something to look into. ULTA. Check it out. And finally, the last industry that I want to go into. Now, there are other ones. These are kind of the main ones that popped out to me. But this industry, I think more people could look into it, and that's in the real estate industry. It's called a REIT, Real Estate Investment Trusts. You can invest in real estate through the stock market. And they have been doing very well, because if you think about it, stocks could go down. However, on the other side, real estate could do something completely different. So they're not really correlated. So that's why, I mean, interest rates might affect them, because they do usually pay a higher dividend than normal companies. So it's kind of like rental income in a way. But let's just look into it. So anyway, we could see, I mean, it's such a small industry that no one could really look at. But we could see Apple under the consumer goods. A little bit to the left says REIT, standing for REIT. Some of the main ones, SPG, Simon Property Group. Another one, O, which is one I talk about a couple times on this channel, which I like, Realty Income Corporation. AVB, they are Avalon Bay Communities. I know that's part of residential. I heard of that before. ESS, Essex Property Trust. EQR, that's Equity Residential. So these are all different real estate trusts. This could be either in retail, residential. There's other ones in industrial. All right, so anyway, their 3-month return is around 5.3%, and their 1 month has been 8.8%. So they're still in the green when the market is down. Something to look into. They also produce nice dividends. Now, if you want to invest in real estate, but don't know which one you want to get into, a good opportunity or option is investing in an ETF. One is a VNQ, that's with Vanguard, with their real estate investment trust index. So you could basically, or essentially, invest in a bunch of real estate companies. It's more diversified, obviously, so it's a little bit more stabilized, and it still has a good dividend. I think it's around, might be average like 4%. So I think that's a great diversification option. people still have real estate, whether it's residential, whether it's retail, people still pay their rent. So that's why I love it. So those are some of the stocks and industries that increased while the stock market was decreasing. I think this is very important to comprehend, especially if the bear market starts to creep in the next year. Fed has been saying that the economy is going to be slowing in 2019, 2020, so we have to prepare. And this video is one of those to help you guys do that. So start diversifying your portfolio. Not like tech is great. They're great companies. However, they're the first ones to get slammed, as we recently saw. So we need to start expanding our minds a little bit. So let me know what you guys think. If you have any questions, comments, concerns, please leave them down below in the comments. I love to hear what you guys have to say. Thank you so much for watching, guys, and I'll see ya in the next one.